some spaces now, some sectors that is. Cement is on our radar. There is a couple of dealer checks indicate that prices have been hiked, or at least attempts are being made for price hikes in the first half of February. About 3 to 5 rupees a bag in North and Central India, while 5 to 10 rupees a bag in West and East. So Navin, Sahadeo, the Director Institutional Equities at Nuvama Wealth, who tracks this place closely, is joining us now. Navin, thanks a lot for joining in. Can you tell us exactly what the price increase has been across the board? Where was it the highest? And is demand strong enough now for these prices to get absorbed?
Right. So demand has been strong all along. I think last few months, ever since December, the environment certainly from the demand side was extremely conducive to take price hikes. And yes, last week, I think around Thursday or Friday, we did hear about attempts being made anywhere between 5 to 15 rupees. But I would still look at it, it's a little late in the game, because come March, you again have volume pressure or year-end volume targets to be met. And that historically has not really helped prices to sustain. In fact, prices tend to buckle under pressure of volumes. And this time, frankly speaking, I think the hike was more in anticipation of a GST rate cut than anything else. Since there is no GST rate cut, I would like to believe that there would be some rollbacks in the coming days.
Oh, all right, Navin. Good morning, Navin. So we got that point, and I believe you're fairly cautious on the sector as well. Give us a couple of numbers, Navin. How much was the EBITDA per ton improvement from your coverage space or for the industry on the whole in Q3 in comparison to Q2? And given the current dynamics, operating leverage will play out. But as you said, pricing has not really come back. What's the improvement you're working with for Q4?
So Q3, I think, saw about 150 rupees of EBITDA per ton improvement on a sequential basis on an average. And I think Q4 can see a similar kind of a number, but that's not the point. What you should look at is FY24 numbers, which I think at the consensus level are expecting at least a 30% kind of a growth in the absolute EBITDA for, let's say, like an Ultratech, which basically means EBITDA per ton is expected or on the street to go up by 20%. To me, given in the current scenario wherein the pricing power is weak, that is at a risk. FY23 is largely done and dusted. So it's the FY24 where I think there can be certainly an earnings risk to the EBITDA per ton.
Okay, so there's an earnings risk to the EBITDA per ton. Which are the companies that relatively look better placed from the entire basket that you track? What are the stocks that you still have a buy on?
So we have a buy on in the mid-cap space. We're looking at JK Cement because that's one stock where you see consistent capacity additions and visibility of consistent volume growth. And of course, the ROEs have always been superior to the industry. So these are the two basic parameters, consistency and high ROEs. And in the large cap space, I think definitely there is value in these frontline stocks like ACC and Ambuja. The other stocks we are, as a sector per se, we are neutral, but see value definitely in ACC and Ambuja at these prices.
Okay, all right. What about Big Boy Shree Cement? Navin, I recall they used to get very elevated valuations and multiples. They've not been finding favor. The stock as well is way off its 52-week high. But how would you approach that one? You're still negative on it?
Yeah, in the sense, see, it's a great company, no doubt about it. But just that they have maxed out on most of the efficiency parameters in my view. And hence, in that context, to expect a further significant improvement is a little difficult. So it's more benchmark to the industry that since the industry, I have a cautious view. I have definitely a cautious view on Shree Cement as well.
Okay, all right. We will leave it at that. Thanks a lot for joining in. That's on the cement space, but overall in the market, looks like the start is going to be